In the financial world, credit risk is the risk resulting from uncertainty in the counterparty ability or willingness to meet its contractual obligation. There is strong link between bank and credit risk, so banks should aware on controlling the credit risk. Okay, for the first issue, as we can see on the table, inefficiency of credit risk management in banking institution is the peril of factor for the credit risk that lead to the banking crisis and failure. So, we choose the Great Recession 2007-2008 as the issue that relate to this factor because in United States, banks too greedy on maximizing their profit without making an efficient credit assessment that lead to the default loan. For the risk evaluation, banks should analysis on how much frequency and severity should bear by banking institution. So, banking institutions should take a serious matter on handling their credit risk because due to the Great Recession 2007-2008, many banks are forced to be closed and bankrupt. Then, for the risk control, bank can using risk avoidance or risk mitigation. For risk avoidance, bank should introduce a complete human resource policy that includes selection, training, placement, job assessment and punishment. Or bank can provide training and development program for the staff under the credit risk management team in getting a better credit officer. Next, for the risk mitigation, bank can divide the credit risk management team into two sections. First team consists of low experienced employees will evaluate the credit applicant using a quantitative approach. Meanwhile, the second team consists of experienced employees will evaluate the applicant's overall financial performance and decide whether to accept or reject the loan application using qualitative methodologies. Thank you.
After we discuss about the internal factor of credit risk, let's move on to the external factors issue. Based on the table on the slide, we have choose economic recession affected by COVID-19 as our issue because we can see, since this pandemic attacked the world, unemployment rate are increasing and many businesses are affected. This situation will be the cause of the decline in economic growth and increased risk of credit and default. RAM Renting Service, which is the largest credit renting agency in Malaysia, has announced about increasing of default risk for 5.7% due to this pandemic. If this problem continues, many banking institutions will face their worst nightmares, which is crisis and failure. Moving on to the risk evaluation, which is about the frequency and severity of loss. To simplify about this, just imagine how much the banking institution will have to bear if large number of their borrowers lose their source of income. Of course, it involves a large amount and become a burden to the bank. Next, what banking institution can do to control this issue? First, for avoid this risk from this issue, bank must limit their credit application by tighten their loan conditions such as limit the maximum tenure of loan and increase interest rate as the use of the term high risk, high return. So, this is how bank can avoid the risk because many parties who want to apply the loan will reconsider it because they will have to bear large expenses in the short period of time if they apply for a loan at that time. Next, for the loss reduction, bank can ask applicant to provide collateral or guarantor so that if the borrower default, at least banks still have another option or asset to sell it to reduce the loss that they forced to bear. So, moving on to loss prevention of credit risk. Bank can tighten condition for accepting loan by accepting only the applicant who have high credit scores, perform well in financial history, no concern and uncertainty about applicant's submitted document, and more prefer to the applicant who has income stability even when economic downturn. For example, government employees. Lastly, bank also can do some risk prevention by collaborating with economic forecasting department to do economic forecasting. This is important because it will help the bank to make a good decision that will not adversely affect to the future of the bank. Alright, for the conclusion, the bank should be more concerned about all aspects including from internal or external situation of the institution. This is because if they already manage external issues but still have issue in their staff or department, it will have a negative impact on the bank. And that's why we choose two factors that represent internal and external factor of credit risk in banking institution. Okay, that's all from us. Thank you for watching.